Hello guys, so welcome back to another live stream. So we're here really to talk about what happened yesterday. So I did go live. If you didn't see that, it was like an hour-long special that I did, just focusing on when we get the CPI news in. That came in at 10 o'clock my time. I think it was it for you, 7 o'clock, AJ?
Something along those lines, yeah. 7
Yeah.
o'clock, I think, yeah.
I know it was 2 p.m. in Eastern Seaboard time, EST, so like New York time. So that's what it was, and that came out. We had the Fed information coming out. They had a 75 basis point hike. That gave a lot of kind of oomph in the market, but then that quickly came back down. And we'll go into a little bit more detail about that later. I want to give you a quick recap. But then we're just going to be looking at today, primarily what happened to the rest of the markets. And today's going to be more of just setting that underlayer. What are we going to be building on in the next couple of months? And obviously, how should your portfolios be structured in order to take advantage of the current environment we're in? AJ, give me your thoughts on kind of, obviously yesterday we had a bit of a pump and then also a bit of a dump. What's your kind of take on what we're seeing so far, and even maybe in some of the traditional markets?
Yeah, so as of right now, the sort of the dumpage has sort of slowed down. What I'm expecting now is to see, dumpage. I'm expecting to see, some period of consolidation now, just to let sort of all those indicators reset, because we've had that massive pullback, from when we broke those major support levels, and yeah, we are in some need for consolidation. And we're talking about the traditional markets. We are actually seeing a pullback on the Nasdaq, and we are sat at a major support level. I do have a nice pattern to show you over on that chart in a minute. But yeah, we are sat at major support. It's a bullish pattern, just to let you know. But recently we have been breaking to the downside out of these bullish patterns. So as of right now, I'm a bit unsure of where it's going to go, but we are sat at support, and yeah, we'll get onto that in a moment.
No, I'm inclined to agree with you. I very much am. And I want to break down just exactly what we're kind of looking at. I mean, one, Nocturnal, he's, if you've come out and kind of come through the gates with it quite hard. We're most likely in a global recession. A lot of people would agree with you. I know a lot of economists would probably agree with you. And I mean, the thing is, for a recession, you have to have negative GDP growth for a certain amount of months. So I don't think we're in that yet. A lot of people are kind of calling that we are in one, but it's not technically, so therefore it's not classified. But yeah, you're probably not wrong there.
Also, I know there's a lot of speculation about the cry.
Sorry,
That's what we're all doing. Yeah, I know there's a lot of speculation around the housing market as well. Have you got any input on that, Ben?
Yeah, so well, I mean, from the housing market, it was actually weird. I haven't really got this in my notes for today, but yesterday when I was watching the stream, and I apologize for everyone who was watching, because I don't know where my AirPods are. Yeah, so I had Jerome Powell in one ear, and then I was trying to listen to it, and my brain's not that big, but I was trying to listen to it, interpret it, and then give it out to you guys. So there was a bit of a delay there, which I apologize. But yeah, ultimately, the housing market is going to be one of the first things that kind of, well, not one of the first, because the crypto and the stock markets have already started to come down. But across the world, we are looking at, obviously increased rates of borrowing, which means less people get mortgages and there's less buying. So assuming that selling stays the same, which it will, because house prices are elevated, those smart people are going to begin selling their houses now because prices are at that elevated level, but people are not buying. So you end up with massive supply and very, very little demand, which consequently means that house prices will probably tank across the world. That's, obviously I'm not a housing expert, but that's really what we're kind of expecting the dynamic to be in the UK and also across the US as well. That's my little 2 cents there, AJ.
Yeah, that was well said.
Yeah. So I'm just going to quickly jump in. There's 2 things I want to show you. Let's just bring this up. I'll put my screen up here. Firstly, I want to give a shout out to our friend Patchy Coin. Well done. You have in fact won our $100 giveaway in Bitcoin. Very well done. So this was actually before we reached 1,000 followers. I have to say shout out to everybody on Twitter, because you've actually, really done. We're very happy to have everybody here. 2,000 followers now, which is great. And the reason it kind of went very quickly, so we had to, we kind of got to 2,000 followers faster than what we had initially anticipated. So we're a little bit late on that. Apologies, but Pak Choi, not Pak Choi, that's a vegetable. Patchy Coin. I hope you're very happy with your $100 in Bitcoin. Now, what we did see, stocks and treasuries slide as recession fears return. Now, this was kind of after we had the initial pump from Jay Powell. Now, just to give you a bit of an indication, we now have the Fed funds rate at 1.75%. The next meeting is in 5 weeks, as you see here, 6 days, 5 hours, 45 minutes. And this is where the market is currently anticipating a 50 basis point hike. We had 75. Couple notes. I'm just going to really quickly run through them. We have the market is kind of pricing in a 4% interest rate by the end of the year. The Fed is kind of pricing at around 3.4, which allows space for a rally at the end of the year. So the expectation is 50 basis points for July. September, you can follow this, 2.25 plus 0.5 is 2.75, again 0.5, 3.25, and then in December, only a 25 basis point hike. That's kind of what we're looking at, and still falls in line with what I'm anticipating of a little rally towards the end of the year. Jerome Powell did say, in quotes, 75 basis points is unusually large and not expected. So that's why we're thinking 50 basis points. Unemployment looking to go from 3.7% at the end of 2022, rising to 3.9% 2023 and 4.1% by the end of 2024, which obviously is not great. But with this anticipation, they know that we're going to have inflation for a while. And that is kind of a good thing, in that they're not going to do what is considered a Paul Volcker, which is just kind of raise the interest rates above current levels of inflation, which is like, immediately raising not by 75 basis points, but by a whole 9%, which is absolutely crazy. And that's why we kind of had that little pump here where the fear was behind us. That's not the right pump. Actually, it was only like 10 hours ago or so. So here we go. So that's why we had this little pump, because the fear was behind us. But then everyone kind of thought, well, hang on a second. Yes, we have inflation under control and we have 75 basis point hikes. Well, actually, maybe we're going to end up in some form of a recession. And this is why the wider market, the crypto market, and also the stock market has now begun to kind of fall back down in light of this potential recession that we're going to fall into. This is not really going in too much about the recession. You can see this further down here. So September contracts, SP 500, NASDAQ 100 gauged at least 2.2% each, with traders giving up their initial optimism over Fed Chair Jerome Powell's comments that supersized rate hikes won't be the norm. So everyone's like, oh, well, if it's not going to be normal, we'll have a nice, easy market. They've done what they need to do. Now we can invest in the market again, hence why we had that pump. But then everyone thought, oh, actually, hang on a second. Maybe we're going to have a recession, and we're going to be in that for a while. So this is just what the market is currently pricing in. And I think we can have a look at that technically as well, can't we, AJ?
Yeah, we can. So, just looking at the Bitcoin price as of right now, we are currently sat at $21,300 approximately. It's not looking great for us at the moment. But, talking about the traditional markets, we are at, a pretty major level as of right now. So we're looking at this bottom yellow line here. And, previously we have found so much support. So this, just to let you know, this is the NASDAQ 100. So this is the 100 top stocks that are being traded on the NASDAQ exchange. And, we are, as of right now, currently sat at this major support level. Now, we do have a resistance level up here as well. And we have tested this resistance level twice before. But this is, a bullish pattern. But recently, these bullish patterns that we've, been seeing, they have broken towards the downside because, of how bearish sort of the sentiment is at the moment. So, it's not 100% going to be, you know, a bullish pattern that plays out here. The probability of it being, you know, like breaking to the upside is higher than breaking to the downside. But, you know, as I've said, you know, most of these bullish patterns have been breaking to the downside recently because we are, you know, so bearish at the moment. So this is a major support level that I am going to be keeping a close eye on in the next 8 hours. That's when this candle is going to close, and in the future candles. If we do break to the downside here, I do expect to see quite a bit more downside for, you know, traditional market and the crypto market as well. Looking at Bitcoin, as I said, you know, sitting at around $21,233 currently. We are below that 200 MA that I have been talking about, you know, and we have seen, you know, that slight pullback on the shorter time frames after that news came out from the Fed. And also on the 4 hour, I just want to show you on the 4 hour quickly. It looks like Bitcoin, you know, wants to form some sort of pattern, and that's what we want to capitalize on. So we have seen so much downside for Bitcoin, you know, for the past 3 days. Now, I am expecting to see a period of consolidation here. And what I'm looking for, you know, throughout this period of consolidation is for Bitcoin to form some sort of pattern that we can trade off, you know, and a trade that I can sort of bring to you. So on the 4 hour, you know, I'm sort of looking at maybe a potential pennant formation that could potentially break to the downside because, you know, that is a bearish pattern. However, you know, it's sort of too early to suggest that. So, you know, I'm still just waiting for something. On the hourly, we can take a quick look at the hourly, and you can see that we are forming these two channels. So we entered this channel and, you know, found resistance at this white channel here. We got some support along this here as well. So, you know, this is a potential trade as well if we do break out of that white channel. We also have this smaller blue channel, you know, found resistance along there, and we have found support pretty close to the support as of right now. But, you know, I think as of right now, we are pretty far away from a breakout. So I will just be keeping an eye on that. You know, I want to start bringing you some trades, you know, on the shorter time frames rather than just on the bigger time frames. So yeah, we're going to be looking out for these trades. What's your opinion on how low you think we're going to go, Ben? Because, you know, I do have this target of around $15,000. Now, for me, it's not, you know, solid, but just because, you know, previously, you know, I've showed this CVDD, and, you know, it's predicted. Make sure you watch the previous streams because I'll go in a bit more depth. But basically, the past three bear markets, we have found a bottom on this CVDD, the pink line. So that's currently sitting at around $15,000. So my thinking is, if we've done it 3 times before, what's stopping us from doing it again? So for me, that's my bottom. But I want to, you know, get your opinion, Ben. Where do you think the bottom could be for Bitcoin?
It's a very good question. I mean, you know, I think we have 2 different bottoms. I think we have a candle close bottom, and then we have like an actual bottom. And I would say that, you know, looking at the data and a number of the different, you know, I guess we'll call them indicators that, like we said, we've been through previously on the previous streams. You know, I'm going to say that Bitcoin's bottom is probably, and it depends obviously on what happens with like the Fed and stuff. I'm going to say kind of candle close, maybe like 20K. But I think, you know, probably wicking down to, I do think about, I don't know, I'm going to say maybe 14. I think maybe 14K. And I just think the reason why is, you know, a lot of people do think, you know, I don't think 10K Bitcoin is doable anymore. I just think because of the amount of orders that will be in place, not just from retail investors, but I think, you know, we're going to have probably a 14K Bitcoin only for like a flash second. And that could even be due to a bit of manipulation. Obviously, the market cap of Bitcoin is a lot smaller, so it's much easier to be manipulated at the moment. But I think candle close, the lowest we can go is probably about 18 and a half. That's my personal opinion, just because, you know, obviously we often and always have respected that 200 moving
Yeah.
average, which is that blue line that you guys can see on the screen. So
Yeah.
that's, that's one of the key kind of bits of support that I think we're going to stick to. But considering, on a lot of exchanges, the high, the previous high, which was that 2017, that kind of top of the last cycle, was
Yeah.
kind of raging between, and on this, I mean, where's this? This is
This is the
an
weekly.
index on TradingView. What's the
Yeah.
price on there? That white line that you have?
The all-time high.
No, just down
Oh,
underneath. It's like 20K or so. What's that? 19.
so 19. Yeah. So the previous all-time high, that was actually around $19,800.
Yeah, so with that, and then looking at kind of the candle closes on a couple different exchanges, they had a bit of arbitrage back then. It wasn't always the same, so different
Yeah.
people will be using different numbers to kind of say that's the absolute base.
Yeah.
So I would say kind of we're looking for around about under 20K definitely, but I'm going to say
Yeah.
in the region of like 19K. I
Yeah.
would be a very big buyer at that stage, and
Yeah.
I also because I think that's candle close. If we don't kind of respect this 200 moving average, but
Yeah.
because of recession and a few other things, that I think, okay, to answer the question, absolute lowest, I'm going to say 14K.
Yeah.
But another thing that I want to add in here is that previously, looking at the last cycles we've had, 2017 bull run, moving into 2018, even prior to that, crypto was crypto. Nobody was really involved in crypto. It wasn't integrated into the global markets. Now we're at a stage where it is very much integrated to the global markets. I mean, if you look at the correlation, let's say back in 2015, 2016 of Bitcoin versus the NASDAQ, there
Yeah.
wasn't really, that much correlation because people weren't buying the same assets side by side,
Yeah.
because crypto was very niche. It was like it was a nerd's market, or it was an illegal market. Because with Silk Road, it used to be used for illegal processes and stuff like this. But
Yeah.
I think nowadays there is more of that correlation. So there are so many different factors. I think that does make it very difficult to call the bottom. But
Yeah.
personally, I'm buying all the way down to 15, 14K.
Yeah.
If we wick below and we go to 10K, I'll be wrong, but I still won't care because I'll still be happy that I'm buying at, at the levels of 15, 14K or whatever, just because of the level of confidence I have that we will continue to see it move quite heavily to the upside. And, I'm
Yeah.
happy being a buyer even at 20K.
Yeah, yeah, and we do have all our buy orders in here as well. We're dollar cost averaging as of right now, and we do have our bear markets portfolio strategy video out. So if you have missed that, make sure you head over and watch that. We have a $500 account and a $5,000 account that we want to show you us trading those up. And as of right now, we are sticking sort of to the safer classed cryptos, which is Ethereum, Bitcoin, and obviously having some USD T as well, because my expectation is sort of the bottom is going to be 15,000 for me, but there is a chance that that can drop lower, and by having cash, a little cash reserve, it means that we can capitalize on that price going a little bit lower than we expected to, because we can just dollar cost average that or that initial position down even further. So yeah, 15,000 is a bottom for me. I don't want to see Bitcoin break below this 200 MA, because we've never actually done it before. The COVID crash, if we zoom in enough, you can see we had a very, very slight break, but previous bear markets, we've never actually broken below it before. But I'm sort of not bothered that it did happen during the COVID crash, because it was sort of it was a pandemic, wasn't it? So I'm not too worried about that, but I'm not expecting the candle to break below this 200 MA. So like you said, it would be a quick wick down, and then coming back up and finding support on this 200 MA, bouncing off that. Hopefully then we can start seeing Bitcoin back up at 30K, 40K, 50K, and then all-time highs and so on. So that's it for me. But for me to flip bullish, we need to break this lower high lower low trends that we have formed. So we want to create another lower high, which gives us a lower price for me to flip bullish on. So, potentially say that we make another lower high at approximately 32,000, then we see a rejection from there. That gives me, a bullish case. If we do break this $32,000 level, that's when I will flip bullish. But as of right now, for me to flip bullish, we have to break that $47,000 level. We are very, very far away from that level as of right now. But yeah, so 15,000 for me, that's sort of my bottom. I want to know what everyone else's bottom is. So make sure you head over to Twitter. I did post this poll over. When was this? This was a few hours ago. I think it was about an hour ago, actually. So make sure you head over there and just give us your thoughts on what you think the bottom is going to be for Bitcoin. I'm very interested to know what your thoughts are. As of right now, 42.3% of people who have voted have said that they think the bottom is going to be in between 17 and 20K. That sort of lines up with what I'm thinking as well. So yeah, right now it's just a waiting game, really.
Yeah, no, you're absolutely right. And, to be honest, I don't want to be one of these people, and I'm not going to, I never have and I never will be one of those people who say, obviously, I said this was the bottom. I think anyone who accumulates at these levels, I'm going to say anyone who accumulates below even 25K is in a very, very good position long term, and I think there's two different ways you can look at it. You have those short-term traders who say you need to have your entry orders at this specific level, have them at 14, have them at 15, have them at 16K, whatever, they might be saying. But even when we're going through our portfolio, we're making it very clear. We're dollar cost averaging in, we look at this. Yes, there are short-term trades to be had, and that's why we're kind of DCAing in. But, the way in which we view Bitcoin and we're talking about it is in a much longer time frame and in a much wider state of mind, so that, we're looking at this over the next kind of couple of years, not just within the next 2 weeks. Can we make any money buying it at 20K or something? So, I want you guys to kind of, keep that in mind. And like I said, I'm never going to come back and say, oh, I told you this was the bottom.
Yeah, and that's what we're doing with these two portfolios here. These are long term. I am going to have another portfolio for trading. So when we do get these potential trades coming out, then I'll have another portfolio for that. But these two portfolios that we showed you, these are portfolios we are going to be holding for a very long time. So that's why we are dollar cost averaging in. That's, for me personally, that's the best way to get as close to the bottom as you can. And even if you I've got a prediction that the bottom is going to be around 15,000. Even if the price doesn't come down there and my orders don't get filled, I can cancel those orders once I'm happy that Bitcoin has found that bottom, and then change my strategy by putting that money that I had at 15,000 and putting that in, instead of having it at 15,000, I put that at maybe a higher price when we get a breakout of a resistance level. So say we broke above a resistance level at 24,000, I would put that in there, and changing the strategy. Instead of trying to get dollar cost averaging in to try and get as close to the bottom as you can, you are just entering a position when you break a strong resistance level, and that resistance level should not ever be broken below again, on the bigger time frames. But yeah, so it's all about trying to find the best strategy, and as of right now, the best strategy is to dollar cost average in.
Yeah, no, absolutely. And yes, Ash, we are reading the chat. We often get people to throw in some comments. I know you mentioned that. But yeah, I see what you mentioned in terms of calling the bottom. But like I said, in our previous videos, we've always said that we believe the best thing is to DCA in. So yeah, that's our current strategy. If you do have any questions, though, speaking of that, drop us a message in the comment section. Obviously, we'll be able to see that. If you have any questions about what you think about, at the moment, this kind of message is focused, or this video is mainly focused around the traditional markets, about what happened with the Fed, because that's the biggest thing that's moved all of the markets recently. And I know I kind of talk about it quite a lot, and I feel as though not many crypto YouTubers do. Often talk about the Fed. If you guys have seen this, seen our streams for any duration of time, you'll know that I'm often bringing up CPI data that's coming out, or a jobs report and what the effects that might have on the market. I did my CPI on Friday, went live during the print, and got a bit of stick for it for the title, saying that CPI will smash the crypto market. But it turned out to be okay. My prediction was true, which was good. But speaking of that, I kind of think, and I think that Jerome Powell thinks that we have seen the highest CPI print that we're going to get. Now, obviously, like I said, in 5 weeks we have another. Let me just bring this up here. This was actually for a question. I was going to just show you guys something, but bringing this up here. So on July 27th, obviously in 5 weeks, we have the Fed rate decision, but this is going to be influenced, the market's pricing in 50 basis points, but this is going to be influenced by the CPI print that we get on the first week. I'm not sure if it's the first week of every Friday. I think that might be the jobs report, but the CPI print usually comes the week after. So we'll have that bit of data to kind of influence. And obviously, if CPI comes in above expectations, we're seeing a 75 basis point hike. Absolutely. But if it comes in, at expectations or below, we're probably going to stick to that 50. I do go through that quite often. And there was a question earlier. Hope you're still on. Let me find it. It was from Vanessa Steen. Could you please describe what macro factors would need to happen for a recession to turn into a depression, as these typically happen every 80 to 90 years and therefore probably due for one? One thing I will say on this is, previously it's been much harder because of the amount of data and the lack of collaboration, to actually get all the data into one place and then analyze it. So it's really hard to analyze what's happening and if there is going to be a depression. So I think we're kind of, depressions are going to be much less likely. I don't think we will see a recession, but just kind of looking through some of the macroeconomic factors, some of you guys might know what these are, some of you might not. It's basically what's happening with money, so fiscal policy, any kind of unemployment as well. That's another big one. Let me just actually get my head onto this. So it's monetary policy. I think it's also then what happens with input output. So what production numbers do you have? What is the unemployment? So therefore, what's the GDP? How many people are working? How much are you, as a country, are you creating? If all of these kind of go down, so if unemployment goes up, if we see output of your country go down, if we see inflation continue to go really high, if you start printing loads of money while inflation's going really high, then all of this is going to go, is very, very, very bad ultimately for an economy. And that's when you begin to see more of a depression. And you can read up about macroeconomic factors, if you like. But just a quick overview is that generally, if you have unemployment, if you have, let's say, a lack of production, bad GDP in a country, that usually causes a depression. But I don't think we're currently headed for one of those, just as, as a personal opinion. I think currently with quantitative tightening, reducing that balance sheet from 8.9 trillion by a factor of 47.5 billion per month, that will be increased in August to 90 billion per month coming off of that balance sheet. Plus also with the interest rates continuing to hike up, and the fact that the market is anticipating 4% unemployment, 3.7 by the end of this month, by the end of this year, and over 4% in 2024, I think we're kind of okay, or the market will be kind of okay with having that level of, should we say, bad economy. It's going to be considered not so bad because inflation's coming down. And then you compare it against the rest of the world, and not every country in the world can be in a depression. Someone's got to be a winner. And if you look at, Turkey, their inflation's 74%. Russia, their interest rate is over 9%. The UK is looking for a double-digit inflation by the end of the year. So, it's not looking good everywhere. So I think overall, in the US, probably be okay, not in a depression. A recession probably will drop into, but not for very long, in my opinion. But there you go.
Yeah. Yeah, if there's any altcoins that you want me to do some TA on as well, drop them in the comment section, and I will get onto those in a future video.
Oh yes, yeah, that's very good. That is very good. Yeah, I hope that helped, Vanessa. So yeah, thank you guys for watching. We will do a altcoin TA, so VRA, Veracity. Have a look at that one, AJ. Ash has just mentioned. Thing is, so recently, the reason why we haven't is that altcoins, they're not going to bounce before Bitcoin does. So we feel like it's better to focus on Bitcoin because that's the major thing moving the market. And once we understand that, then we can know when things will bounce, and then we can follow with those altcoins. Unless there's some crazy fundamental news like Celsius, for example, where that it's a bloody roller coaster. If you are interested in Celsius and also another company that is going to go under, massive hedge fund based in Singapore, watch the previous videos. I think it's called Breaking, where we're talking about Celsius and 3 Arrows Capital. Very, very interesting videos. So without further ado, let's do you want to do that TA in a separate video, AJ?
Yeah, I think we'll do it on a separate video. I just need to get my head around it, look at it, look at some charts. I'll go through the what I'll do is I'll go through the shorter time frames, the 1 hour, the 4 hour, then I'll go through the 12 hour, the 1 day, and the weekly, get all the TA on it. I've not actually got any TA on it at the moment, so I'll have to get that done for next video.
Perfect. Good. All right, guys, thank you very much. Like the video if you enjoyed it, and also don't forget to subscribe to the channel, and we will see you tomorrow.
Thank you for watching.